Welcome to the session of Good Credit, Build It or Rebuild It. My name is Beth Harris and I'm a Financial Solutions Strategist with Confluent Strategies. We are a sales agent of Equifax, and today I'm going to be going over with you your Equifax credit, helping you to understand more about what is in your Equifax credit file, what makes up the credit file, what's not in it, and how the scores are impacted by just things that you as a consumer do on a daily basis, actions that you can take to improve your score, and then actions that you take that may affect your score in a negative way. So let's get started with going through some of the information. So first of all, let's talk about information that is included in your Equifax credit report. First of all, your identifying information. So in every consumer file, it's unique, and we're going to have your name, your address, your social security number, and your date of birth. So when a creditor submits an inquiry for your credit report, when you have applied for a loan, they're going to be sending us that information, and we're going to use that to match up to your consumer file so that we send back the right consumer file. So those four pieces of personal identifiable information are key to matching up to make sure that we provide the right consumer file back to the creditor. Now, the consumer files are returned for when you apply for credit, employment, maybe for insurance purposes. Those are all permissible purposes, and it's important to have those four pieces of information. Also, information that's in your Equifax credit report will be credit accounts. That's going to be related to current and past credit accounts, things that you're actively paying on, such as credit cards, loans, but also those accounts that you've paid off and the history associated with those. That information is reported by lenders and creditors. They send us a file on most of them on a monthly basis. Some may send it more often, but we get a data file from those creditors, and we process those usually about the first 7 to 10 days of the month, and that gets updated to your consumer file. So everything associated with those trade lines, your payment, the history associated with it, how your balances have changed, if your payment amount has changed, your credit limit changes in that, all of that is updated at least on a monthly basis. Also the type of account, when your loan is initially reported to Equifax, when you take out that loan or that credit card at the account opening stage, they're going to report to us the type of account it is. Is it a credit card? Is it an installment loan, such as an auto loan or a personal finance loan? When was it open? And also, what's the limit or the original loan amount? And then your account balance, and that's going to change every month when we get that data file. And then your payment history. It's going to show us what's the current status. We're going to update the current status for this reporting period, and then the previous months that it's been reported. What has been your payment pattern? Have you paid it on time every month for the last few years or months that you've had the account, or have you missed some payments? Have you gone 30 days, 60 days, 90 days? That will be reflected on your credit report as well. And then inquiries. Those are what we call hard inquiries. Hard inquiries are when you as a consumer initiate a transaction with a creditor, and those inquiries are going to post, and it'll show the creditor name, it'll show their unique identification number, and that's an identification number that we Equifax assign to each creditor that they use to request a report, and then the date the inquiry was made. Now, those are visible to creditors, but they're also visible to you as consumers when you pull your own credit report, when you request it from Equifax or any of the credit bureaus. You're going to see that. Now, you also see soft inquiries. Soft inquiries are not visible to creditors. Soft inquiries may be from account review. Creditors will have account numbers that they use, member numbers with Equifax, that they use to pull credit reports for account review collection purposes, maybe for a deposit account opening. Those are soft inquiries and do not impact your score. So they're beneficial to the consumer. So you will see those as a consumer on the copy of your credit report, but creditors do not see soft inquiries. Another type of a soft inquiry would be a pre-screen or pre-approval. If you've ever gotten a pre-approved credit card offer in the mail before, then your credit report will reflect a PRM inquiry. That's a soft inquiry. That reflects that whatever creditor sent you that offer, they worked with Equifax and they did a marketing campaign. They reviewed your credit file to see if you met certain credit criteria to qualify for that pre-approved offer. And then we posted inquiry because that your file was viewed. Another type might be employment. If you applied for employment and that employer pulls a credit report as part of their review process, that will post as a soft inquiry, and it's an EMPL. A change going into effect July 1st of this year, 2020. Anytime that you apply for services with the wired, wireless, internet, or paid TV services, going forward, when they pull a credit report, those are going to be posted as soft inquiries. So again, soft inquiries have no impact to your score, but hard inquiries do, and they are required to have a permissible purpose. Now, hard inquiries will stay on your file for 24 months. Soft inquiries fall off after 12 months. Bankruptcies and collections. You will also see those on your credit file if you've ever had any of those. Bankruptcies, regardless of chapter, we're going to reflect on the report, when it was filed, the court, it'll be a case number, what chapter it is, the status of it, whether it's individual or joint. If it's a collection account, it's going to show the collection agency, who they're collecting on behalf of, the status of it, the balance, and so forth. However, on medical collections are kept very private. We only show that it is a medical collection. We'll show the collection agency, not who they're collecting on behalf of, because we're protecting the privacy of the consumer. We don't divulge anything that has to do with what kind of medical services they received, who the doctor was, or the facility involved. So if you're ever working with a lender and they pull your credit report and they note that you have a medical collection and you're not familiar with that, you're not aware of what that might be, they're not going to have access to that information. So what you need to do is you need to go to Equifax and request a copy of your report, and your copy is going to show who the provider was that the collection agency is collecting on behalf of, and then you in turn can contact them to get more information that will help you to kind of research that. So let's talk about what's not on an Equifax credit report. So we're not going to have anything that has to do with your checking or savings account information. Now, I will say that lenders, data furnishers, they can report if there's a charged off checking account. They have the ability to do that. Not many do, but if you ever see information on your credit file that has to do with a charged off checking account, that is possible to do it. But day-to-day checking and savings account information, that is not a part of your Equifax credit report. Bankruptcies. If you've ever filed a bankruptcy, depending on the chapter, after a certain period of time, it will be purged from your file. It can be anywhere from 7 to 10 years, again, depending on the chapter, but definitely no longer than 10 years, and it will fall off. Judgments and tax liens. Now, judgments and tax liens are no longer provided on a consumer's credit file. That was a change that was made beginning July 1 of 2017. The regulators made a decision that There were some erroneous reportings on consumer files as it related to judgments and tax liens. Because there was not enough information provided to the bureaus so that there could be a good enough match to the consumer's files to make sure it was being updated on the right consumer records. So the credit bureaus made the decision that they were going to suppress all existing judgments and tax liens that were already on the file, and then going forward, we would not accept any further reporting of judgments and tax liens. So it used to be out there prior to July of 2017, but now it's not available on your Equifax credit report. Charged off debts and collections more than 7 years old. So if you've ever experienced a charge off or a collection, once that has charged off, then 7 years, it's going to fall off. A collection item, 7 years from being referred to collections, it's going to fall off. So it will not impact your credit any longer. Equifax does not have anything on your credit file as it relates to gender, ethnicity, religion, or political affiliation. The only personal identifiable information, again, that Equifax will have is your name, address, social, and birth date. Now, on occasion, instead of birth date, we might have age because that's what's been reported to us by a data furnisher, which is a creditor. That's another word for it. But we won't have anything related to any other personal identifiable information. Medical history. Again, there's nothing about medical history on your file. If you have a medical collection, all it's going to say is that it is a medical collection and lists the collection agency, but nothing regarding services. Criminal records. Now, Equifax credit report is not going to have anything regarding criminal records, but there are specialty CRAs, credit reporting agencies, that do contain criminal record information. So when you apply for employment with a company and they do background checks as a part of their pre-screen process for employment, they may contact that specialty CRA to see if there's any criminal records on you. So, but that's not with Equifax, that's with another vendor. Also, motor vehicle records is another specialty CRA. If you apply for auto insurance, the insurance company will go out and do a search with that specialty CRA to see if there's any type of record on you of previous car accidents or any type of negligent activities in driving a motor vehicle. So, they're going to search there, but Equifax is not going to have anything to do with motor vehicle records. Actual items purchased with a credit card, nothing on the credit report. Now, credit card information is contained on your credit file, but it only has to do with the balances, the credit lines, how you've made the payments on that, nothing to do with what you actually purchased with a credit card. So let's talk about how long information stays on your Equifax credit report. So negative information generally stays on your credit report for 7 years. Now, late payments, collections, charge-offs, we already established that that's 7 years. So there is a date indicator that gets updated when you go 30 days past due. And when you go 30 days past due on a loan or a credit card, then the clock starts counting down from that point in 7 years. Now, if you cure that delinquency and go back current again, then that date gets wiped out. But if you happen to you're not able to cure that delinquency and it stays delinquent to the point it goes charged off, then it's going to get purged after 7 years. Bankruptcies, again, as I said, with Equifax, and this is a regulatory guideline. It's called the Fair Credit Reporting Act. Bankruptcies, depending on the chapter, whether it's a 7, 11, 12, or 13, they could stay on there for 7 to 10 years. So it all depends on the chapter that you file. Closed accounts paid as agreed. So closed accounts, meaning you've had a loan. Let's say you've had an auto loan and you've paid it off. You paid it as agreed. You didn't have any past due payments. Once you've paid it off, the creditor's going to report that one last time as paid off status. You don't owe anything more. The balance is zero. What Equifax will do is they'll start counting down from that last report date for 10 years. And after 10 years, that trade line will get purged off of your credit file. We have to do that periodically just to keep things clean, because as you add lines, because at some point it might get too big. Files can get too big that when creditors try to pull them on you, that they're so big we can't pass them through. So we have to keep consumer files as clean as possible. So on paid as agreed accounts, after you've paid them off, 10 years later, they're going to get purged from your file. But what if you had an account that's not paid as agreed? You've gone delinquent in the past and it's maybe gone to charge-off status. Well, again, that date of first delinquency, when you go 30 days past due, there is a date of first delinquency that gets updated. When you go 30 days, it gets populated. And from that date of first delinquency, it starts counting down 7 years. And if you go to a charge-off status, it's going to get charged off. Now, active accounts, paid as agreed, active accounts, as long as you're paying on them and using them, they're going to stay out there forever. Some of you may have credit cards that you have had for years in your wallet. Now, what I do suggest is that if you have these credit cards and you don't use them, if you don't use them for an extended period of time, the creditor eventually, which when you see it on your credit report, it's going to say credit grantor. They eventually will go ahead and close that for inactivity. Because if you're not using it, it's costing them to have that account out there and you're not using it. So if you haven't used it, let's say in 5 years, it's very possible that they could close that. Now that's not a negative thing. If you've paid it as agreed, you've not used it, and they say it puts a special message out there, closed by credit grantor, that's fine. And when that happens, that's a paid as agreed account, and that will fall off after 10 years. But as long as it's active and you use it on occasion, that's going to stay open and active, and we're not going to do anything with it as long as the lender keeps reporting on it. So let's talk about how your credit scores are calculated. Credit scores are provided by the 3 major bureaus, Equifax, Experian, and TransUnion. They generally range from 300 to 850. And they're going to vary based on bureau, and this is why. Some creditors will report only to one bureau, let's say Equifax, and not report to TransUnion or Experian. But then you may have some that report to all 3. It's completely optional to the creditor who they report to, whether it's one or it's all. We encourage them to report to all because it's to your benefit, the consumer, but again, it's up to the creditor. There's no right or wrong. If they're not reporting to, let's say, TransUnion and Experian, but only Equifax, that's okay. That they're not doing anything wrong in that. So if you apply for credit with one financial institution, let's say a bank that pulls an Equifax credit report, and you have a score of, let's say, 720, and then you go to another institution, maybe it's a finance company, personal finance, you want a personal loan, and you go to them and maybe they pull a TransUnion report, but your score might be a little less. Let's say maybe it's a 700 with TransUnion. Well, why is that? Well, it could be that there are more trade lines reported to Equifax than there are to TransUnion. There are, in the area that you live, there are more data furnishers, more creditors, more lenders that are reporting information to Equifax than there are to TransUnion. So that could be the difference in the scores. Also, there are different types of scores that are used by lenders and creditors. Two particular ones that we want to talk about are auto lenders and bank cards. So when you go car shopping and you're talking with a finance manager and they're going to pull a credit report on you, more than likely the model of FICO score that they're going to pull is what we call the auto adjusted model. Now, that FICO model is specifically designed to look at a consumer's file with more impact to auto loans and installment loans and how they handle those. So it's giving more impact to that type of credit than it would to revolving credit, because that's the purpose of that loan that they're using the credit report for. So we have that type of model. Also, there's a bank card model. So if you apply for a bank card, let's say a bank card issuer, one of the big issuers of credit cards that we have in the US, they in turn might use a bank card adjusted model where that FICO score has been designed to look at revolving credit, put more weight on revolving credit than, let's say, installment loans, because that's the purpose of pulling the credit and underwriting, is how do you handle revolving credit. And then when you go to a bank and just apply for a loan in general, maybe a mortgage loan or something, that's going to be using just a standard FICO model. So all of those models look at your credit in different ways depending on the purpose, and the scores could be just a little different. It's not wrong if the score might be higher on one model than the other. The credit that's looking at is still the same. It just weights it different based on the purpose, the industry that's looking at it. The types of scores. There is FICO score, which is developed by Fair Isaac. The bureaus don't own that score. We license that from Fair Isaac, and then we pass it on to the creditors to use in making decisions when they're underwriting for loans. But there is another type of score called Vantage Score. Vantage Score has been developed by the three major bureaus. We collaborated together and developed this model score that can be used in place of FICO score. It's very much like FICO. There are some lenders that are using that now instead of FICO. If you're a Credit Karma customer, and we'll look at that in just a moment. If you're a Credit Karma customer, when you get a score, you're receiving Vantage Score, not a FICO score, but Vantage Score. So looking at your scores, how do they break out? What information goes into making up your credit score? What impacts the score the most? Well, looking at this pie chart here, payment history makes up 35% of your score. That's a lot. The next highest is amount owed. How much do you owe to your creditors? That's 30%. So just those two items together make up 65% of the score. Then you have length of credit history, new credit, and types of credit used. So let's look a little bit more at those. And also let's talk about some things that you do that can affect your score. So how many credit accounts do you have and what types? That definitely is going to impact your score. Credit cards, installment loans, mortgages, and store accounts. We have learned over the years, looking at different models, the type of loan that gives the most weight, that kind of gives you the biggest lift in your score, is a mortgage loan. You own a home, you take out a mortgage loan, that gives you kind of the biggest lift. But when you're trying to establish credit for the first time, you have kids getting out of school, they want to establish credit. What do you advise them to do? Open up a credit card. That's the first thing to do. It's the easiest thing to do. And then you kind of build off of that. You have your credit cards, you might open up a store card, you might apply for a personal finance loan, you buy an auto, and get an auto loan, etc. So, but how many accounts do you have? The FICO score looks at that. What's the makeup of your file? Do you have too many credit cards and not enough installment loans? Do you not have a mortgage loan? It looks at all that. How many store accounts do you have? Also, how many new credit accounts have you opened? Have you opened a lot recently? Have you applied for new accounts recently? Have you applied for new ones? That's going to be based on an inquiry. And how many have you opened? So that's going to be new trade lines. So you have to think about that. You don't want to have a lot of new credit all at once. One thing I always advise consumers, it's easy to get caught up in when you go to a retail store and you're checking out and they ask you, would you like to save 10 or 15% today by opening up a store card? It's very simple. Just give me your information. When you do that, they're running a credit report on you. And that's going to post an inquiry. And you're probably going to be approved. So that's going to report as a new trade line. You're going to get a new credit limit. Then whatever you're purchasing that day is going to be charged to that new account. So let's say it's a new store card and they give you $500 limit and what you bought today was $250. Well, right there you have a 50% utilization. So those are things right there that are negatively going to impact your score. So you have to think about when you do things like that, it's instant gratification. Yeah, I'm saving 10 or 15% today on my purchase, but do you really need that store card? Because how is it going to impact my score? Because if you're working toward maybe a big purchase down the road, you're saving money to buy a house, you're saving money to buy a new car, how can that one event impact my score negatively that may make it impossible for me to, get a loan or get a rate at what I need for that purchase, in a few months. So you have to think about that because just that one act can impact your score in multiple ways. How old are your credit accounts? Accounts with long history show responsible credit behavior. So if you've had credit cards that have been open for an extended period of time, you use them, you don't have them overutilized, you pay them off or you keep them paid as agreed. Newer accounts with lower average account age may impact your score. If like you said, you open up those department store cards at the time of checkout. If you do too many of those, you go one store to another in a short period of time, say in 6 months or so, that can really drop your score down. One thing, if you're looking at your scores, I don't understand. I pay everything as agreed. I don't miss any payments, but my score has dropped. It doesn't make sense to me. You have to look at how new is my credit out there? Have I opened up a lot of new things? Again, inquiries, the age of my credit, my utilization. Balances relative to your credit limit, that's utilization. So I get asked the question, what's kind of the percent of my balances to my overall limit? You can't look at just one trade line. I mean, you can look at it. So I got a credit card with a big issuer and my balance to my credit limit is, I'm using about 75 to 80% of my total limit. That's pretty high. But then you can look at all of your revolving debt and add it together, add your limit, and then add your balance and do the calculation to get your overall utilization because that's what it's going to look for as well. So if you look at the whole revolving debt together and you've got high utilization, then that could have a negative impact to your score. But if it's just one account, it's not going to be as big a deal as if it's a lot of accounts. So what you want to do is try to keep your overall utilization down less than 50%. Also, do you want to pay off and close credit card accounts? Well, think about if you do that. If you pay them off and close them, and then that leaves you a balance on existing credit cards, how does that affect your utilization? If you just pay down a credit card to zero and you're disciplined enough not to use it and charge it back up again, you know, your utilization on that one card is going to be 0%. So when you add it with your other revolving accounts, that's going to lower your overall utilization. So that's going to have a positive impact on your score. So when you think about, you know, reducing your debt and trying to increase your score, you don't always necessarily want to pay off and close a credit card account. Now, if it's an installment loan, you have to close it. I mean, you pay it off, it closes automatically. But with revolving debt, pay it down to 0. And because when you close it, it has an impact of, well, have I paid off a credit card that I've had for a long period of time? So it goes back to the age of the accounts, and then I've lost that 0 utilization on that account. Another thing that impacts your scores, do I have any reported foreclosures, bankruptcies, short sales, or delinquencies? Now, if you do, those are eventually going to fall off. And the longer they age, the less impact they're going to have on your score. But it does take a while for them to have less impact. So if you've ever gone through any of those, don't give up. Just stay the course. Any credit that you have that has not gone into charge off, just keep paying. You know, if you've gone delinquent, get it back current and keep paying it current. You'll right that ship and you'll get things turned around, and your scores will start showing that you're paying on time, and it'll start going up on you. But you have to be patient. Don't give up. Keep working at it. So how are inquiries factored? Inquiries from the past 12 months are considered when calculating the score. Now, those hard inquiries that I said that, you know, are posted on a consumer initiated transaction when you apply for a loan, that creditors post, that we post on your credit file when creditors make an inquiry. Although those inquiries stay out there for 24 months, for 12 months, they're going to impact your score. So remember that, you know, for 12 months, if I have a lot of inquiries, they're going to have a negative impact on my score. Mortgage inquiries and auto inquiries only count as one inquiry in a 45-day period. So if you're out auto shopping, looking for a new car, you go to multiple dealers, you talk to the finance manager, they pull credit on you, that's okay. Because if you've gone to, say, 4 or 5 dealers, they've pulled your credit 4 or 5 times, that's only going to count as one inquiry in a 45-day period. So if you go over several weekends, don't worry. One inquiry, less impact on your score. Same thing with mortgage. If you own your home, you have a mortgage on it, you're looking to refinance, you're rate shopping, or if you're looking to buy a new home and you're rate shopping, you go to those mortgage lenders, they pull credit on you to assess, you know, what kind of rate that they can give you. Multiple inquiries, again, in a 45-day period from a mortgage lender is going to count as one inquiry only. Those are the only 2 types of hard inquiries in a 45-day period that we only count as one. Everything else is its own individual inquiry. Again, a single inquiry can impact a consumer differently, person to person, because just like each person, their DNA is different. They're unique. Every individual is unique and different. So is their consumer file. So I get asked this question so much. If I do this one thing, how will my score change? I can answer that question because I don't know. Fair Isaac owns the FICO score. They own the proprietary rights to them. They only know how the scores work. We know kind of how things can impact a score, but when it comes down to the details of it, we don't know how one event could shift the score one way or the other numerically. So, you know, if you're in a room of people, say 10 or 15 people, and at that point in time, an inquiry is made on all of those people at the same time by the same creditor, that inquiry would have a different impact to every individual in that room because everyone's credit file looks differently. So to try to predict how one event, how one inquiry, how paying off a loan, how paying down a credit card, anything is going to impact a score. I just don't know. So how one single inquiry can impact a score, I can't attest to that. I don't know. It's different for every person. So another question that may get asked is, why was my score different on the app I checked in the morning, like your Credit Karma, or maybe you go in to your online banking. They provide access to your FICO score. Why was it different when I checked my app versus when I applied for the car loan that night? Well, that goes back to what I was talking about earlier. There are different models that are used, or maybe a different score type. Look, again, if you're using Credit Karma uses the Vantage score, which is owned by the 3 bureaus. It looks at your consumer file, but the models are a little different. So if you pull your Vantage score off of Credit Karma, and then later today you go car shopping and they pull credit on you, well, number one, it's going to be a FICO score, and secondly, most likely it's going to be an auto FICO score, specifically adjusted for auto lending. So it's not apples to apples. Same thing if you happen to purchase your FICO score, or your bank provides FICO for you. It's FICO Open Access is what some clients purchase for their customers to have available to them on a monthly basis, so that you can go into your online banking and check your score. That is a FICO score. But again, that's a different model than what might be used by the lender that you're working with. And also, when was that FICO score updated? Now, the lender is accessing that, they're appending it to a file. That score could be anywhere from 14 to 30 days old. And then the score that the lender is pulling is real time at that point in time. Your file can change on a daily basis, depending on information has been updated in your file through data furnishers providing updated to your loans or credit cards, or inquiries have been made. So it can range. That's why you can see different things. Also, here on the screen, you can see there are different models of FICO scores. FICO 2 is offered by Experian. FICO 4 is offered by TransUnion, and FICO 5 is Equifax. Those three are kind of one and the same, and they're used by mortgage lenders. FICO 8 is used most often by auto lenders and bank cards. And then FICO 9, I do say here it's the newest version, but not widely used. We are getting ready to release a brand new version. It's FICO 10. It's not out quite yet in the market. It's just starting to make its way out there, but creditors really aren't using it yet. So there are different models that different creditors use. I mean, right here you can see there are 5 FICO models listed, and that doesn't even include the specific kinds used for auto and for bank card. So that's why sometimes you see a difference in the scores. Again, the Vantage score was developed by Equifax, Experian, and TransUnion, and it was created in the 2000s. So let's talk for a moment about how to identify inaccurate or incomplete information. You as a consumer have a right to dispute what you believe inaccurate information. But let me also give you an update to something. We are currently in a pandemic, the COVID-19 pandemic. And because of that, the Equifax has made a decision, well, actually all the 3 bureaus have made a decision that we're going to provide access, allow access to consumers' credit files more frequently. Now, previously it's been on an annual basis. You could contact the bureaus and request a free copy of your credit report. Well, that has changed for a period of time until April of 2021, the three bureaus are allowing access by consumers to their credit files on a weekly basis. So if you want to go to Equifax, TransUnion, Experian on a weekly basis, all three of them, and request copies of those reports, so you can log in, review your reports on a weekly basis, you can do so. That's 156 reports over the next year. Now, this started in April of this year and will go through April of 2021 of next year. I encourage you to do that. With everything that's changing with forbearances, deferred payments, changes, maybe skip payments out there, reduction of payments of what your scheduled payment is going to be, the special comment codes that are being placed out there where maybe a loan or credit card, the consumer's been impacted by the declared or natural disaster, which is the pandemic. Consumers need to be aware of how their credit is looking. So that's why we wanted to make that available to them. So be aware of what your credit looks like. And if you see anything that doesn't appear to be accurate, you have the right to dispute that information. And to do that, you would go direct to the credit bureau to do so. You need to ensure that your personal information and your credit information is accurate and complete. If you see anything that's inaccurate, you need to you can either go direct to the creditor or lender and tell them that something's inaccurate. You file a dispute with them direct. Or really the easier way to do it is to file a dispute. You can go to Equifax.com and you can file a dispute. If you go to click on personal, there's a step-by-step way to dispute online, and Equifax will send a communication to that creditor for them to investigate your dispute. And then they'll respond back to Equifax, and they have a limited time frame with which they have to respond back by. And that's a regulatory guideline. And they have to respond back with their research, and then we'll act accordingly. So right here, you can go to Equifax, create my Equifax account, and visit the dispute page. So I've given you the website address right here, Equifax.com, and go in and register with Equifax. Create your own account with Equifax. It's very simple. There is so much information on Equifax's website for you, the consumer, to further educate yourself about your credit, about credit scores, how to dispute information. Well, I think we'll talk about freezes in just a minute. There is just a lot of information and it's easy. There's articles. I think there's even some short YouTube videos for you to watch. Very, very informative information out there to further educate you about your credit. If you see fraudulent information, definitely contact the creditor about it if you're not aware of it, and help them to help you further investigate it. If it determines that you are a victim of ID fraud, they can help you walk through the steps to maybe file a police report, get documentation in place, and also you can put an alert on your file. This is voluntary, you can do it, but you can contact Equifax that you want to put an alert on your file. There are two types. You can put an initial alert on your file that you're a victim of fraud, maybe a victim of fraud. Those are usually done, it stays out there for 1 year. We're going to get to that right now. Initial fraud alert stays on there for 1 year. That usually is done, let's say you've used your debit or credit card at a retail store and you find out several months later that their database has been hacked and their debit credit card information has all been stolen. And you have a concern that someone might take that information and attempt to commit fraud using your information. You can put an initial fraud alert on your file, and what that's going to do is just tell whoever pulls your credit report that they need to take special steps to ensure the identity of the individual that authorized them to pull their credit. You will also be asked to provide additional contact information that will be put in your file. So when the creditor or lender pulls your credit report, they're going to see that additional contact information, and they'll reach out to you to verify, are you the individual that authorized us to pull your credit file? An extended fraud alert will stay on there for 7 years. So if you ask the credit bureau to put an extended fraud alert on there, that's when you know without a doubt someone has stolen your identity and they have committed fraud in using your ID. You have to have a police report or documentation to back it up. The bureau will then send a communication to the creditor to notify them that you have been a victim, and they have to stop reporting that information, and that actual trade line gets deleted from your consumer file. Also, when you put that extended fraud alert on there, it prevents you from being included in any what we call pre-screen offers for credit in the next 5 years. So you won't receive any future credit card offers or auto loan offers or anything like in the mail from creditors telling you you've been pre-approved. Another type of alert you can put out there, if you happen to have any family members or you yourself are active duty service, military service, you can put an alert on your file to say, I am active duty, because as we know, many servicemen and women sometimes are stationed overseas. They're away from home. They leave a power of attorney for loved ones behind, you know, a spouse or significant other or family friend, to conduct business on their behalf. But unfortunately, they fall victim to fraud too many times. If they put this alert on the file, same thing as a fraud alert, it will ask for contact information. So if a credit report is pulled, we're going to put that contact information, and the user of that credit report is going to follow up and verify that the person that authorized the credit report to be pulled has the authority to do so. Now, that will stay on there for 12 months. And again, that will eliminate them from pre-screen offers for 2 years. Now, let's talk about security freezes for just a moment. I mentioned those a while ago. When I talked about you could go into Equifax, create your own account with Equifax at myequifax.com, you can now do that to place freezes and take freezes off of your account. Now, previously, Equifax required a 10-digit PIN. We don't require that any longer. That's a recent change. And we're glad, because it's very hard to remember those 10-digit PINs. So now all you have to do is you go into Equifax, create your account. Now it's going to go through what we call a multi-factor authentication. We're going to ensure that you are the consumer that is opening up the account, that you are who you say you are. There's only information that you would know. And we might send you a passcode on your cell phone or send something to your email address, something that you should only know in your file. We'll set you up the account, and then you have the ability to log into that My Equifax, place a freeze on your file, or take the freeze off. Now, if you already have a freeze on your file, you can go in and remove the freeze with this, doing it this way. You no longer have to have that PIN. So it's very easy to do. Now, there's also another option that you may not be aware about, and that is an app that you can get through the App Store, either with iPhone or Android, and it's called Lock and Alert. That's L-O-C-K, Lock and Alert. That's provided by Equifax. And this is an Equifax only app. When you download that and set it up, again, you go through the credentialing to set up the account with Equifax. But when you do, just with the swipe of a button, you can see here the animation there on the screen. You can take your finger and move the button over, and it will lock your consumer file. Swipe it back, it's going to unlock your file. Each time you do that, it's going to send you an email notifying you that your consumer file has been locked or unlocked. So if you're out shopping for a car, your file is locked, you can use that app to unlock it while you're going through the financing process. Once it's done, you can lock it back. Now, What you cannot do with the lock and alert, if you have a freeze on your file, you cannot use the lock and alert to unfreeze it. Same thing, if you use the lock and alert app to lock your file, you can't go into My Equifax and unlock it using the unfreeze function. They're not interchangeable. So you have to use either or, but they're both great options for you, the consumer, to have control over who has access to your file and when they have access to it. The FACT Act pertains to your ability to gain access to your report. Here we have information about gaining access. Again, that goes back to, we now are allowing access to your credit files on a weekly basis until April of 2021. You can go to myfico.com if you want to get access to your scores. There are charges for that. So you'll have to check that out. I don't know what those charges are. And that finishes everything up. I hope you found this information very beneficial. If you would like additional information regarding your Equifax credit report, or just to learn more information about your credit scores, the information in your file, please visit equifax.com/personal, and you'll be able to gain a lot more information. Check out some articles and some YouTube videos. It was my pleasure to spend this time with you, and I hope you found this information very beneficial. Thank you so very much.